Peter Hug joins us in studio. We'll get his thoughts next. Peter, good to have you back with us.
Nice to be here.
So we're coming back from a 4-day week last week, and this Tuesday we see gold moderately lower as we're talking right now. Peter, what's going on the gold front?
You know, I have not liked this gold market for the past few weeks. I find it very heavy, and I mean, other than the geopolitical issues in Ukraine, which has caused some support in the market, there's been very little fundamental reasons to be long this market in the short term.
So what numbers are you looking at right now? What's key for you here?
1278 continues to be a key level. We saw that a couple of weeks back. I suggested it would hold then, and it did. We got a rally back over 1300, and this afternoon we find ourselves right back at the 1278 level. It's key that holds. If it doesn't, I think 1255 is the next play.
So gold's been stuck in this range right here, Peter. Usually if we're stuck in a range, isn't it building pressure towards the upside?
Not necessarily. I mean, when it stays in a range, it'll wedge itself out and eventually break one way or the other. And this market needs some fresh ammunition to go higher. Now, the Ukraine situation caused some buoyancy in the market. But what's really missing in this market is physical offtake. It's almost non-existent in North America, and the Chinese just haven't stepped up to the plate like they did in 2013.
Now, speaking about the Chinese, interesting news item came out on Monday where China is engaged in direct gold imports, bypassing the Hong Kong hub. What could this mean, Peter?
Well, I mean, it could be that China's trying to import more gold. Getting hard numbers on how much China imports has been difficult. You know, a lot of analysts have been using the metric of exports from Hong Kong to mainland China as sort of a gauge on how much China's importing. Now, directly importing, bypassing the Hong Kong hub might indicate that they're trying to fudge the numbers or keep the numbers a bit more secret. But again, it could just be a much more efficient way the Chinese have found to get gold into the country. So it's difficult to come down to a conclusion. But
all right, Peter, let's talk silver now. I had an interesting interview last week with an analyst who told me that he's really watching the silver market and waiting for silver to catch up to the party. And if silver fails to catch up to the party, it could be a risk to the party. Do you agree with that mindset?
Yeah, I think silver, I mean, in sympathy is a trade with gold most of the time. And it does have an industrial factor that plays into silver directly. That's based on supply and demand fundamentals. Global economies are starting to improve, but I'm still not seeing that in offtake in industrial silver demand. I think the market is heavy in the metals. I mean, it's difficult to find a short-term reason to be long. And the equity markets are still performing relatively well in the States. So there's a competition for cash, and right now the market is the cash is flowing into equities and bonds and away from the metals.
Well, faring better than gold and silver are the PGMs, platinum and palladium, not suffering as much, Peter.
Not as much. There's obviously still some sympathy selling in the PGMs relative to the price drop in gold today. But it's more a supply-demand fundamental for the PGMs, with the South African strike situation still not resolved. Some potential supply disruptions from Russia should Russia react to some of the sanctions that are being put on them from the EU and the United States. And we get a global recovery. There is a strong case to be made that supply-demand fundamentals are bullish for the PGMs. So you're not seeing the same type of downdraft that you are in gold and silver.
And just an interesting note on Russia. Russia surpassing the U.S. this week as the second largest gold producer following China. So something to keep an eye on there, Peter.
That's correct.
Well, it's always good having you come by the studio. Final thoughts for investors watching?
Yeah, I think you've got to watch the ranges. I mean, I still, medium to longer term, I still like the metals. But as a trader short term, you've really got to be sensitive to the 1278 level, and if it breaches, there's a potential of seeing it, 1255, and if we lose that level, then it's possible we might see a test of the triple bottom of last year.
Peter, it's always a pleasure having you in studio. Thanks for dropping by.
You're welcome.
And thanks for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com. Thanks for watching and happy trading.